So, good morning, everyone, and very much welcome to another Flash Friday. I'm your host, Don Ginsel from Holland FinTech, and I'm really looking forward to have a conversation with you today about everything that's going on in FinTech. And of course, as always, I have a special guest who is able to share some beautiful insights into what's going on behind the industry. And I'm very happy to have Robert Kraal here from Silverflow. Robert, good morning.
Good morning. Good morning, Don. Good
morning, very much welcome. Very much welcome to the show. I'm really happy that you could join, especially since the news about Silverflow getting funded was in the news yesterday. So it's really a hot topic at the moment, and I think it's really really special what you're up to. So I'm really keen to share that with our audience today. I'm also really happy actually that it's a very nice day as well, because actually Holland FinTech turned 6 today. It's on the 23rd of October in 2014. We actually had our first meetup in Amsterdam to try and help and organize the FinTech ecosystem. So it's a bit of a special day for us as well. But I definitely want to focus more on what you're up to these days, because I think getting something started now, fresh from the cradle, is something that's really worthwhile talking about, and quite some interesting lessons, I think, for other entrepreneurs as well. So.
Well, congrats on the 6th year. I think I may have been there with you on some of the conference in the very early days.
Yeah, no, indeed.
Yeah. But also in the early days.
No, exactly. You've been around for quite a while, right? So I think, maybe nice to start with that. I think we briefly talked about that just before we got started. I think people are writing now about Silverflow as a former Adyen team is setting up a new venture. But I think you've been around already before Adyen, right? And I think that's where the payment revolution already started, even before that.
Yeah, I've been in payments in fintech since the late 90s already, and the first company that I worked was a company called Bibit, where with the 5 of us we initially worked on a billing platform, which later became a payments platform. Well, Bibit has been sold to Royal Bank of Scotland in 2004, merged with WorldPay at that moment, and of course through many different cycles, many changes of ownership. But essentially, part of the current WorldPay is still related to what we built back in the 90s. I stayed there until 2006, had some time at Google as well for their Google Checkout products, but also a few other Google products. I was the COO for Doc Data Payments, including EVP for their payment methods. And after that, I joined Adyen in a very early stage, also as a combination of COO, so responsible for risk, legal compliance, all the other operational stuff. And as a secondary head also for the financial partnerships. So think of the partnerships with the card acquirers, payment methods, treasury banks, etc. And in the context of being responsible for the licensing program, the operations and the payments, I'm also the founder within Adyen of their acquiring and processing division, which is almost separate division, or it was at that time anyhow, focusing on their own acquiring processing solution across the globe. So with own licenses or BIN sponsorships across the globe. When I left Adyen, I spent most of my time either as an investor in fintech startup world across the globe, and now as a founder myself again.
So you couldn't leave it to really you really wanted to get your head dirty again.
Well, I really enjoy working with startup companies. So what I've seen, during my time at Adyen, but also the other companies, but also after that it is an enormous amount of fun to start up a new company, to work with people with a vision, to build it out from an idea to an actual business. So it's great to see that from the side. It's fantastic doing that yourself as well, and that's why we founded Silverflow again.
And so, what was the opportunity you wanted to jump on, right? So, where did you at some point get this idea, like, oh, wait a minute, there's something here that we could actually pick up and make something beautiful of?
Yeah. So the idea itself, it didn't pop up at one moment. It's been there for a long while. So if you work at a payment service provider, typically you work with other acquirers for your Visa Mastercard transactions. Mm-hmm. And there's a commercial part, so what are the prices? There's an operational part, how do we work together in terms of boarding new customers, reconciliation, etc. But there's also a technical part, and many of those relations The technical part actually is a bit snowed under all the other contractual agreements, simply because most of them, both the acquirers and the payment providers, are more focused on good pricing and good operational practices than the actual technology. You sort of take that for granted.
Okay.
But how it works in reality as a payment service provider, you might be connected to a number of different acquirers, and those acquirers all have their different technology. So if you work with a number of different acquirers, you also see the differences between the technology that they chose to.
Yeah.
And quite often that technology, it's not something that is built by the acquirer, it's something that they choose for a number of years ago, and they still essentially run their technology on that, their acquiring business on that particular platform. And what we see is that those platforms essentially are, if you look at it from today's standards, just outdated. So many of that technology is 30, 40 years old. And those platforms run, so that's not the issue. They're secure, they're stable, they're safe, etc. But they have not been designed with how a current payment process would look like. So it's difficult to get the accurate data, whether it's on pricing, car scheme pricing, interchange pricing, or conversion metrics, or innovation. So Visa, MasterCard, of course, launch a lot of different products every year. And as a payment service provider, if you're an innovative payment service provider, you would like to bring that functionality to the market as soon as quick as possible. But if you're limited by the technology of that bank, and not because that bank doesn't want it that way, but simply because they don't own that platform themselves, they just buy it in as a piece of software.
Yeah, exactly.
That holds down innovation. So we're tackling that that layer, which exists in many banks at this moment, typically 30, 40 years old, with 2020 style technology. So that's essentially the processing in the cloud, and the processing is in these terms defined as the last layer before you actually access the Visa MasterCard network. So really on the very close lines to Visa MasterCard to improve that process, bring that from, let's say, the 1980s or the 90s to 2020 style.
Yeah. Oh, cool. Yeah, I think that's really interesting. And so are you then focusing on banks as your core customers then in the first place as well? Or do you expect it to be PSPs, for example, or even directly to merchants?
Well, I think particularly the first two. So of course, payment service providers, they know this challenge because they already work with different acquirers, and they see, that's at least they have different solutions, and they also might see that, some of those platforms have some functionalities that they like and they don't like. And if it were up to them, they would like to have this upgrade to the platform, because working with data, working with cost-based plus pricing, working with conversion optimization, with automated chargeback, those elements are getting more important for payment service providers. So if they would work with us, they can change their technology, they can keep their existing commercial contract with acquirers in a slightly different form. Essentially, go to your acquirer and say, okay, listen, we still would like to work with you, but we want to bring our own technology. So from a commercial point of view, it might change a little bit, but not too much. From an operational point of view, it changes a little bit as well. But from a technical point of view, you make a big jump forward. So that is one aspect which is fantastic for payment service providers. Many payment service providers at this moment across the globe are also looking to become an acquirer themselves. So they will have the natural choice and say, okay, if I'm an acquirer myself, will I use one of the platforms that I already know that are out there in the market? So we're looking at those legacy platforms. Will I build it myself, which will take a couple of years investment and continuous investment from your dev team? Or will I look for something which is more 2020? Well, we're the only option that we know of at this moment who have built this 2020 style processing platform.
Okay. Cool.
But also acquiring banks, yes, they might see this problem a little bit less, because they don't see all the different platforms. They see their own platform, and they might know in the markets that some customers are moving away from their platform because another company offers more innovative products or a slightly different way of handling chargebacks, etc. So they might see that they're losing customers because of that, but they don't see the differences between those platforms. But definitely we could be an add-on or a replacement for those type of companies.
Okay.
Merchant directly is for us, a certain type of merchants could work with us, but we're not an acquirer ourselves, and we don't have the intention ourselves. So that would still be in combination with the acquirer who actually is doing the acquiring business for that particular merchant. But we have solutions for them as well.
Yeah. Oh, cool. I think it's a really interesting position to take into, and I think let's say it's definitely a place where most people don't get to look at what's really going on under the hood, right? So I think this is also something you probably discover only because you're actually really deep into payments and really understand the market dynamics already for a while.
I think that you can see this if you have experience working with a large number of acquirers. Then at a certain moment you see, hey, this acquirer uses processing platform A, this acquirer uses processing platform B. And if you've worked with 50 or 100 different acquirers, then essentially you say, okay, these are the big processing platforms. So we have these 8 big ones, and there are a number of smaller ones, and there may be a number of acquirers who actually did build it themselves in the past.
Yep.
But once you're in the position and say, okay, I am becoming an acquirer myself, and that is the choice. You get to choose between all those 8 or 10 processing platforms that you know. Then you have to make a decision, which one do I like? And if all of them have, let's say, remarks in the sense of, okay, this doesn't really fit with me. If I would have the choice, I would do it better than the platforms around. And that's the moment that you start thinking, say, okay, why don't I build that platform myself?
Yeah.
But obviously, you can only do that if you know the positive points of each individual platform, but also the negative points, so that you know, say, this is functionality I like to keep in my own platform, my own preferred platform, and this is functionality that I would like to improve in my own platform. Many of those improvements, they don't have to do with stability or security or uptime, those type of things. Many of those improvements that those payment service providers would like to make have to do with data transparency, and that is data transparency when it comes to pricing, so interchange, network pricing, etc. It is data transparency when it comes to, let's say, decline transactions or risk management or fraud management, fraud transactions. So that is really about, I want to have more data, I want to have more insight, because I want to give a better experience to my customers. And another element is, of course, innovation, the functionality. How quickly can I get access to new functionality? And what is that new functionality? Visa, MasterCard, and other card schemes, they have a wide set of functionality, but not all those processing platforms, they implement it at the same time. In some cases, the processing platforms are actually way behind, and then you will see that functionality is there in some markets, but simply because your platform doesn't support it, you still don't have access to that for the whole market. And if you pretend that you're an innovative payment service provider, then you also want to provide the brand new, the most innovative tools that Visa and MasterCard can offer.
Yeah, no, exactly. So, so I think, but basically, this is something that I think that also sort of it's not so strange that this is now being born in Amsterdam, basically, right, or in the Dutch market, given the expertise that has been built up here over the years in payments.
Yeah, I think that if you come straight from university, this is simply a piece of software that is unknown for you. You don't see it. So it's unlikely that any outsider outside of the payment world would jump into this particular thin layer in the payment process. But I think that if you talk to pretty much any payment service provider working with multiple acquirers, that they will immediately recognize and say, well, yes, indeed, this is a challenge. We have to keep up all those links to all those different platforms, and none of them really does what we actually would want to in an ideal case.
Yeah.
So yes, it requires some expertise or some previous experience working with all those different platforms before you can spot what is good and what can be improved.
Yeah. Yeah, cool. And so I think it's also nice to see that you already got quite some traction from investors, right, to start funding this. I think you already announced quite a lot of investors that are taking part now in this funding round of 2.3 million, if I'm not mistaken.
We've totally raised 3 million now, and in the last round it was 2.6.
Okay. And so, but I think already I saw that there was quite a list of investors, both national and international. How did you manage that? Is that like something like also an organic process where you've been able to talk to a lot of investors, or was it easy were they familiar to you, for example?
No, they were not familiar to us as a person. Also, well, some of the angel investors, obviously, we know from the business. So many of them we've worked with before, or we know them from the business itself. As you've seen on the list, we've got some investors from Booking, from PayOn, from other payments, from Adyen, from other payments. So those are indeed people that you know from your network, and they joined as an angel investor. When it came to the other investors. We've been looking. Initially, we weren't even looking for an investment in the first place. We raised enough money to actually bring it to a live product, and our idea was to first go live and then raise money. Okay. But we got approached at a certain moment by a number of investors who heard about our story, and some of them actually convinced us and said, "Okay, listen, guys, we know you've got enough money to go live, but do you have enough money to actually run it for 1 or 2 years before you can show that traction? And are you confident that any of your intended customers, whether it's a payment service provider or an acquirer, will sign with you if you can't show a solid financial roadmap? And that actually convinces us to say, okay, listen, it makes sense to show stability to our first customers as well, that we actually can run the show for a couple of years. And that there's interest, that there's backing from some bigger companies. So that's the reason why we decided to do a formal investment round. In all fairness, we had investors who didn't understand a clue of what we were doing. They thought that we were another payment service provider, another payment orchestration or a company, that we wanted to be an acquirer ourselves, etc. And I think the main reason is that many companies call themselves a payment processor as such, and they're right, they're doing that. But we're focusing on a specific part of that chain. So for us, it was difficult if an investor didn't understand it, and some of them, they didn't bother to actually dive into it to work with them. But fortunately, there are many investors who, even if they don't understand it, that initially that ask the right questions and continue to ask questions. Say, okay, please help me understand why you think there's a gap in the market here. And eventually we had and this we were over subscribed. So we had about 10 investors who wanted to invest, and then we went looking and say, okay, where do we think we have the most, a few things, the most value for Series A, because of course this is the seed round. Next round is expected to be after we have a number of customers live, and maybe it's a growth round, maybe it's a Series A round, how you call it. But which of the investors will give us the best position to start raising for Series A? And that's dependent on how much value they can bring in terms of network, but also supporting you with your marketing, with your PR, with some of the legal stuff, etc. Because we had the idea that most of the investors will not be able to help us with pure fintech knowledge as such. We have more knowledge than most of the investors, we think. That's a bit arrogant, but they do differently. Exactly. But the other thing is also that we wanted to have fun. So we also carefully selected and say, okay, with who of the investors can we have a good detailed discussion about what we're doing, and at the same time enjoy the conversation. So that is testing and probing and asking the questions, but also we look very carefully at how do they ask the question, how do they respond, and do we see ourselves having fun with this company for a longer time, in good times, but also in bad times. So eventually we decided on those factors. So we were in a lucky position that there was enough money in theory available, because we had a number of investors lined up. But we typically looked at who can help us the best for the Series A, and where do we think that we have a good, fun, and let's say, a very positive strategic relationship.
Yeah, exactly. Yeah, I think it's really important that you probably the scenario will always have some downtime at some point where you have tough discussions.
They're always with these companies. I mean, we've started more or less, or we started this round during the COVID times, and nobody knows how long it's going to take. It will have impact on a lot of businesses. So it could, at this moment, we're still in the development mode. So to that degree, it doesn't matter too much. But at a certain moment, we want to work much closer with our customers, of course. We can't predict that, but it could be that those type of things turn out different than we're seeing at this moment. But I think that we should have a very good relation with our investors, because they're also there to help us when things go slightly different than that.
No, understandable. And so how critical are Mastercard and Visa, for example, in your team? Do you already have to have lengthy conversations with them about your ideas?
Absolutely. So Visa and Mastercard, of course, they are critical. If they wouldn't want to work with us, then the whole operation would have stopped. So actually, quite early in our phase, we had discussions with Visa and Mastercard at high level, and those were very high level discussions. This is what we're intending to build. What is, in a broader sense, the view of Visa or Mastercard on these type of companies? And the answer was, well, you're probably the only one building this at this moment. So it doesn't hurt us, because we also like to see innovation. Visa and Mastercard, they develop a lot of new functionality, and they hope that it gets picked up by their primary relations, which is on the one side the issuer processing platforms, and on the other side the acquiring processing platforms. But they also know that there's not too much innovation on the acquiring processing side. So they essentially welcome, they're quite open and welcoming for companies who say, okay, we want to bring innovation to the whole payment markets by changing that particular layer and making the innovation that you as Visa and MasterCard make available, also available to, let's say, the end user, which would be, in our case, payment service providers to their merchants or to the consumers. So as a result of those first discussions, we had positive feedback. They say, okay, listen, we can't do anything for you at this moment, but the idea itself is something we support. But of course, then it comes to play and say, okay, how will you be able to get this relation, to get this formal relation that Visa and MasterCard are actually helping you with setting up the projects, setting up the access points for Visa and MasterCard, because they have their own hardware to install so that you can actually connect to their systems. And that's another thing. So we spent quite a lot of time making sure that we also got those marks in the right form. We have them, of course, but it helps if you know upfront if Visa and MasterCard are supportive of this, or if they say, well, we don't like this idea too much, and we don't think their business plan is
exactly.
So the help you got is quite important.
And I think at the same time, you see also that there was discussion about the power of MasterCard and Visa, right? So you see, for example, on a European level, that some banks are trying to come together to set up their own scheme. What do you think about these kind of ideas? Do you welcome more competition at that level?
Well, I think that's launching a new payment. I don't have an issue with it. I think for the market, it's good if there are new payment methods, and I think that good payment methods compete on a good pricing for the merchant or for the consumer, but most of the time it's the merchant, on usability. So how will consumers experience it, but also merchants, on the speed of settlement, security. So there are a number of different aspects. So designing a new payment method itself, you can more or less draw and say, okay, how should that look like? But then once you've had that blueprint of how it could look like or it should look like, then you have a few challenges, because the technical implementation of any of those new networks costs a lot of money. And is that feasible with the pricing that you have in mind? So if you want to compete on price with Visa and MasterCard, and you have to build it from scratch, you have an enormous amount of upfront building costs, and then maybe you can have a lower price per transaction, but maybe you can do that. And the other thing is also marketing, to change the behavior of consumers in the market. And I think that is the most challenging. How do you convince consumers that are already used to a certain payment method? How do you convince them to start using another payment method? And I think that those two actually will be challenges for this new initiative. So the first one is, on paper it looks cool, but the actual cost of such a product might be a little bit higher, and that will translate in slightly higher prices per transaction eventually, cost price, and it's nothing about the sell rate, but maybe in the long run you could do that. But the other thing is how do you change the user habits of consumers? So I think that by itself, I welcome any innovation in the payments markets. And it will get a position in the market, these new initiatives, and that's what you see for many payment methods. If they do their marketing proper, they will get a position. But I'm not convinced that the payment landscape in Europe in the next 5 to 10 years will be so dramatically changed that Visa and MasterCard lose an enormous amount of share. It will shift a little bit maybe, but I don't think.
In general, you see that changes we see coming might look very disruptive, but generally they take quite some time to take effect. So we usually talk more about evolution than revolution.
Well, I think that everybody's looking for that dramatic change, and we've seen, of course, a number of countries there where you've seen dramatic change. Think of China with WeChat Pay and Alipay, etc. There are other examples of different markets where you see in a short moment an enormous change in a particular market. But the difference is that in China there was no alternative. So China essentially at that moment was a grain field where people had very few payment tools, and suddenly they all got their mobile phones, and on top of that there were these payments. So then you're sort of working in a country where there is no alternative, and I think that is the interesting one. if you work in those countries, and I can imagine that still can happen in countries such as Africa or Middle East region, maybe in India, Indonesia, some Latin countries, etc., because people haven't really decided what the best way to pay is. In many of those countries, people are unbanked, but they do have a mobile, for instance. But in Europe, pretty much everybody has a bank account. Pretty much everybody has a credit, and quite often and a debit card. Everybody has a mobile telephone. So those aspects are not new. And if you want to introduce a new payment method in that saturated market, it has to really bring value for either the merchant or the consumer, and preferably both. And those values are usually
don't you think that
risk.
don't you think that the banks, for example, themselves also play an important role there, since they very often for example, also I've got a Rabobank account, and they just switched from Mastercard to Visa all of a sudden. I've just because thrown my way, I have to deal with it. So I think they will play an important role as well in the end in facilitating the dominance of payment rails.
Well, yeah, I think that if Rabo probably would or any bank would probably stop sending you a Visa or a Mastercard, but send you a JCB card, for instance, without asking, that you might have a slightly different opinion. So that might actually be the reason for you to say, okay, if I lose my Rabo Visa or my Rabo Mastercard, and it's exchanged by, and there's nothing against JCB, but it's just that the number of access points is much more limited in the Netherlands at this moment. That you might say, okay, listen, but I want to have a card that matches closer to where I spend my money, and you would like to go shopping at Albert Heijn and whatever, the Jumbo, or where you do your groceries, and you want to have a payment method that works in those stores.
Exactly. Yeah, so but I think that's something that's not always easy to assess for the consumers themselves. So they will very often just take what coming their way. But indeed, the customer would definitely compare that, and especially with international travel, you will find that I think why credit cards are especially Europe also very popular still for international travel, because you know that they will be accepted.
Well, I think that is the key for launching a good payment method, and that is acceptance. But acceptance comes at a price. So the acceptance for Visa and Mastercard is there already. The acceptance for any new payment method is not there at this moment. And in e-commerce, creating acceptance is relatively easy because it's something digital that you have to change. You don't have to change hardware. You have to ask your payment service providers, other companies, to build that and add that new payment method. For point of sale, actually, it's a bit complex to add a new payment method. Because quite often is the hardware, is it prepared? Can you remotely change the software on this point of sale terminal to access new payment methods? And how do I measure, or how do I take in all the new payment details on the go? So on paper, it doesn't look too complex. And in practice for point of sale, it actually is quite complex. And for the e-commerce side as well. So if you go to any large payment service provider and say, hey, I've got this fantastic new payment method, would you like to implement it? The first thing that the payment service provider is going to ask and say, but how many consumers do you actually have? Because I'm not going to spend 3 months of development for a new payment method where there are literally 4 people, yourself, your team, etc. So,
but this is probably also where cloud technology is really going to make a difference, because once you don't need any hardware anymore, you could actually create acceptance and payment very easy going, basically accessible for everyone worldwide potentially. So that could really change it. One thing maybe to touch upon, because I think we hardly got a chance to talk about the news. Time is running out very fast, but I think it's really cool what you're up to, Robert. One thing might be just curious about your thoughts here about the central bank digital currency, the CBDC. Right, so you see central banks all over the world now looking into using currency or alternatives for issuing their own electronic money. That might change the game after all at some point. Are you looking into that as well? Are you keeping track of that, or is it too far away?
Well, I'm keeping track of that, and I think that with those type of central bank regulated cryptocurrencies, they might actually have a chance of being successful as well. More successful probably than the cryptocurrencies that are non-regulated at this moment. But for me, it is not necessarily that any cryptocurrency by definition should be treat as a cryptocurrency. Essentially, you're creating a new digital currency. And there are a lot of different networks that you can add new currencies. If you go to Visa, MasterCard, or SWIFT, or any of the other payment networks and say, hey, I want to invent a new currency, then from a technical point of view, from an operational point of view, they will be able to help you if you are important enough. So it's more about the marketing, what is the use, what's the advantage of this new currency, and will I be able to convince people? If it's a crypto euro, which is totally equivalent, regulated in all the markets, and it's just exchangeable for €1, so you avoid the loss of conversion. I think it's a great addition. I wouldn't see why I, as a consumer, would prefer to pay a crypto euro with my MasterCard versus a normal euro with my MasterCard. Unless there are significant advantages for that. My crypto euros will have a separate euro bank account versus a crypto euro bank account. And that is the part that I don't look at those new currencies that they are better simply because they're cryptocurrencies. I just think you're introducing a new currency and you need ways where you can access that new currency, how you can transfer that new currency, how you can convert them, and you can choose for a fantastic new network as well. But it doesn't mean that the old network is not so good. As far as I'm concerned, you can also process Bitcoins via MasterCard or euros via blockchain. For me, those networks that are being used for the currencies and the name of the currencies, they are a bit independent, and we sort of try to connect them to each other. But in my mind, and nobody's ever been able to explain that clearly, in my mind, you could look them as, okay, we have a new way of securing messages, and we can use them for transactions, financial transactions. And we have a new currency, which we call whatever, Bitcoin or any of the other ones. But for me, I don't see why it is needed that new currency by definition should be processed via this new network. Why can't you process this new currency if you have enough followers via the traditional networks, or why can't you process the traditional currencies?
I think it's really interesting. I think it also has to do with the fact that people are really keen on exploring other ways of using the network. I think that's also why I think your solution is very interesting. That you're actually you're working on the rails, basically. Well, I think that's what got a lot of people into crypto in the first place as well. They really want on different rails. So I think it's a different comparison just to make that. But I'm afraid we already have to wrap it up. I saw that there are some questions in the chat. What I'll do is we'll hang on a little bit after the broadcast, so maybe then we can answer the questions. So if you still have an open question, maybe you could stay in there. We can make the link. But before we really run out of time, I really would like to thank you, Robert, for joining us today, sharing your insights. It's really cool what you're doing with Silverflow. We wish you all the best of luck, and please keep us posted. Looking forward to see you again soon. For everyone who joined in, thank you very much for listening. Please, any questions coming our way, more than happy to pick up any questions or bring on party topics we'd like to hear from. And we're very much looking forward to see you again next week. Have a lovely Friday.
Is to make available all the functionality that Visa and MasterCard offers. And that is more than what most of the other acquirers currently are offering, because those processing platforms are not necessarily offering them at this moment. But on top of that, of course, if we get access and we have access to all the root data that Visa and MasterCard pass back to the acquiring sites, you can build a lot of innovative products on the top of that particular data. And we create open APIs so that we can work with it ourselves,